Tesla's latest partnership could be a significant development for both investors and enthusiasts. Despite facing numerous challenges and record lows in the past year, Tesla has remained committed to innovation. A key piece of recent news comes from a January 3rd press release by Piedmont Lithium. The company, a major global developer of lithium resources crucial for the U.S. electric vehicle (EV) supply chain, announced a revised agreement with Tesla Incorporated. This new deal involves the supply of spodumene concentrate (SC6) from North American Lithium (NAL). The amended agreement, which is set for a 3-year term with an option to extend for an additional 3 years, outlines that Piedmont will provide Tesla with approximately 125,000 metric tons of SC6 starting in the second half of 2023 and continuing through 2025. The SC6 pricing will be determined by a formula-based mechanism linked to average market rates. Under the new agreement, the pricing for lithium hydroxide monohydrate will be determined based on market rates at the time of each shipment. Piedmont Lithium President and CEO Keith Phillips expressed satisfaction with the partnership, emphasizing the evolving landscape of electric vehicles and battery materials since 2020. This deal highlights the growing importance of North American lithium resources and aligns with the Inflation Reduction Act's goal to strengthen the U.S. supply chain and clean energy economy. Production of spodumene concentrate, SC6, is expected to resume at North American Lithium, NAL, in the first half of 2023, with commercial shipments starting in the third quarter of 2023. Piedmont will supply Tesla with SC6 from NAL under its agreement with Sayona, Quebec, which allows Piedmont to purchase either 113,000 metric tons per year or 50% of SC6 production, whichever is greater. This purchase is subject to floor and ceiling prices for the life of the mine. Additionally, in late September 2020, Piedmont Lithium announced a separate binding agreement with Tesla for the supply of spodumene concentrate from Piedmont's North Carolina deposit, with a fixed-price purchase term extending for 5 years. The agreement with Tesla includes a commitment to deliver the first batch of product, with the potential for a second 5-year term if both parties agree. It covers a fixed commitment of approximately 1/3 of Piedmont's planned annual SC6 production of 160,000 tons over the initial 5-year term, along with additional quantities at Tesla's discretion. The SC6 sales are projected to account for 10% to 20% of Piedmont's total revenues from its proposed integrated mine-to-hydroxide project during the initial term. The agreement is contingent on both Tesla and Piedmont agreeing on a start date for spodumene concentrate deliveries between July 2022 and July 2023, depending on each party's development schedules. Following the announcement of the amended deal in early January 2023, Piedmont's shares surged by 8% in pre-market trading, reaching $47.50. This move aligns with Tesla's strategy to deepen its involvement in the raw materials supply chain to accelerate the transition to electric transportation. Despite having only started production of its own battery cells last year, Tesla has long been securing supplies of lithium, nickel, cobalt, and other critical minerals for its battery cell suppliers. Recently, Tesla has expanded its approach to include not just established mining companies, but also junior mining firms that are developing new projects to boost the supply of essential resources. This strategy not only helps these companies raise capital, but also aligns with the broader shift in the lithium market. Historically, lithium contracts have been dominated by long-term agreements with fixed prices negotiated between sellers and buyers. However, recent trends, including price increases and market volatility, have led to a shift towards pricing mechanisms that reflect current supply and demand dynamics. Under the updated agreement, Piedmont Lithium will supply Tesla with 125,000 tons of high-purity spodumene concentrate, SC6, suitable for lithium-ion batteries, from the second half of this year through the end of 2025. Pricing will be based on a formula linked to average market prices for lithium hydroxide monohydrate, with prices determined at the time of each shipment. The minerals will be sourced from Sayona Mining's North American Lithium project in Quebec, Canada, rather than Piedmont's North Carolina project, which is still in the pre-permitting stage. The price trend for spodumene has mirrored the surge in downstream lithium chemical prices since 2021, driven by high demand for EV batteries. This uptrend has influenced prices across the lithium industry, including technical grades, battery grades, and spodumene. Recent gains in spodumene concentrate prices seem to have slowed in recent months. Since early December 2022, Chinese lithium prices have been on a downward trend, partly due to a slowdown in China's EV production in November, which has reduced the demand for upstream lithium salts. According to Fastmarket's fortnightly price assessment, the spot price for spodumene with a minimum of 6% Li2O in China was $8,299 per ton as of December 22. This represents a 1.67% decrease from 2 weeks earlier, though it's still significantly higher than the price of $2,400 to $2,600 per ton reported on January 6, 2022. The electric vehicle market has seen substantial growth over the past decade, driven by the push for sustainability. The number of EVs sold surged from 120,000 in 2011 to much higher figures in recent years. In 2021, 6.6 million electric vehicles, EVs, were sold, accounting for 10% of total car sales, according to data from the International Energy Agency, IEA. In the first half of 2022 alone, 4.3 million new EVs were sold, marking a 62% increase compared to 2021, as reported by EV volumes. Tesla remains a dominant player in the EV market, leading in terms of market capitalization and sales. In the first 3 quarters of 2022, Tesla, led by Elon Musk, generated $57.14 billion in total revenue, with $50.17 billion coming from vehicle sales. Despite facing challenges and experiencing record lows in the past year, which led some media to claim that Tesla is no longer the world's largest electric car producer, this perspective may arise from including plug-in hybrids in the comparison. Nonetheless, Tesla continues to be a major force in the industry, investing heavily in large-scale production of electric vehicles, while many traditional automakers have only been producing compliance vehicles to meet regulatory requirements. Tesla is aggressively ramping up production at its existing factories in Fremont, California, and Shanghai. However, the most significant production increases are expected from its newer gigafactories in Berlin and Austin, Texas, which are still in their ramp-up phases. In addition to soaring deliveries, Tesla has achieved profitability without depending on regulatory credits. In 2021, net income reached $5.5 billion, a significant increase from $721 million in 2020, with less than one-third of this profit coming from regulatory credits. The company's strong performance has continued into 2022, with record revenues, operating profit, and free cash flow reported in the third quarter. Despite a downward trend in Tesla's stock for most of 2022, the company has solidified its lead in EV production. Traditional automakers have only recently acknowledged the shift towards all-electric vehicles and begun investing heavily in their production. Tesla's ongoing innovations in EV technology and energy storage have further widened the gap between itself and its competitors.